Hey guys, it's Charlie Howe here. So I've been wanting to make this video for a while now. Basically the state of the markets and what I'm doing to navigate these markets and what I'm doing to basically invest my money moving forward. Now we have an issue here as the Federal Reserve is raising interest rates. The government has the highest debt it's ever had in history. It's about $30 trillion in debt. And a lot of people are levered up, have a lot of leverage, a lot of loans and things like that. And you know what? There's a lot of things suffering in the market because of that. So like stocks are suffering right now. Crypto has seen 50% losses. It hasn't really hit the housing market yet because housing has been very tight. And so I wanted to give you guys my thoughts based on moving forward and how I'm going to be investing my money. So about a couple months ago, I put a substantial amount of money into Bitcoin and Ethereum, and I sold pretty much down all my other crypto holdings. So I have Bitcoin now and Ethereum, and a couple real estate rental properties, right? So I have a couple rental properties, and obviously I'm still doing TSP. So for those of you who don't know, it's a military retirement income or retirement account, basically like a 401k. And so I'm continuing to contribute to that because I think that's going to keep going. On average, it's 8% for the next 10, 20 years. But moving forward, I'm actually renting a house right now. I sold a property in North Carolina, and then what I did is I just invested that into cryptocurrency. I took a big portion of that and put it into crypto. So moving forward, what I want to do is I'm going to actually borrow from my crypto, because you can actually borrow from your cryptocurrencies, so that I can have a nice cushion down payment on this next property I'm going to buy. I'm in Omaha, Nebraska now, and it seems like the area is growing. It's a pretty good area. It's pretty nice. So I'll be buying a house there. I'm actually looking right now. It's even though it's a tight housing market. Now I have started to see, because I am watching the market every single day. I have started to see that the market's loosening up a little bit. There's a little bit more inventory coming on the market. The Federal Reserve just raised interest rates 0.25%. So now we're going to see, as they keep raising interest rates, more availability and more inventory coming on the market, because less people are going to be able to afford their loans, right? The monthly payment is going to be much bigger for most people, meaning making it more accessible for most, right? And that's what we want. Inflation is really high right now, and gas prices are ridiculous. I'm on a temporary deployment location right now on Palmdale, California, and gas prices out here are almost $7 a gallon. So it's gotten really ridiculous. The Federal Reserve doesn't have a choice. They're going to have to keep incrementally raising rates. Now, I think they're going to raise rates to like a crazy level, like say 5-6%. I really honestly don't think that, because then it's going to put too much pressure on the debt interest that has to be serviced for the government. So they're not going to do that. They're working hand in hand with the politicians to try to make an easy soft landing. Now, that's all right. That's fine. It doesn't change the strategy. Now, about a year ago, 2 years ago, like right after COVID, everything started going crazy because they started printing a massive amount of money. So you started seeing stocks that had no business going up in value were going up in value. Real estate everywhere was going up in value. A house that I bought 2 years prior to that was already up $100,000. So that's a little ridiculous in a 2 year span. Things have to come down a little bit slightly, right? Now, does that mean that things are going to crash? I don't think things are going to crash, to be honest. I think they're going to keep inflation kind of running a little bit hot in order to not crash the markets. They don't want to crash the markets. They don't want to cause a recession, especially with the Russia-Ukraine situation going on right now. There's a lot of volatility in the markets. So with that being said, my recommendation, this is what I've been doing, is basically keep buying rental properties if you can find deals, and the deals could be had based on location. So like if one location is super saturated, you got to start going on the outskirts of those locations to buy those properties, and kind of go where things should be moving and improving, right? Where do young people want to go, because they're going to be the majority of people buying houses moving forward, and where are the improving areas. You want to stay out of the bad neighborhoods, obviously. Location is the biggest thing in real estate. So that's what I'm going to be doing. And this will be my fourth property, actually my fifth property I've ever bought, but I did sell one to invest that in crypto, and also to avoid paying taxes down the road if I wanted to sell later on. So what I'm going to be doing is, like I said, I'm going to be borrowing $10,000 from my Bitcoin holdings, and I'm just going to be paying interest on that until I pay it off. But it's just to get me right here to the down payment that I need for this other property that I'm going to buy. And it's in an up and coming neighborhood in a little Bohemia in Omaha, Nebraska. So I'm gonna keep doing that. Once that happens, I'm gonna start deleveraging some of my holdings. I do have a couple loans out there like that I have used to invest, and I'm gonna start probably paying those things off, going a little more cash heavy, and probably just keep on dollar cost averaging into cryptocurrencies such as Bitcoin and Ethereum. Those are the only two I really trust right now. Cardano may be a good third, but I already have a little bit of money in there, not a ton, but I'm going to stick with the two big leaders. Those are pretty much safe bets in my opinion, and I think that Bitcoin's going to keep rising on the tune of 50% every year on average for the next foreseeable future. I would say 10, 20 years from now. So I'm comfortable with that. I'm also comfortable with the TSP holdings that I have, basically S&P 500. So I did make a switch in my TSP. I actually switched because I have so much in S&P 500, the C fund. I actually switched 90%. Actually, all the rest of my contributions are going in the S fund now, because those are the tech stocks that have been beaten up, and I think they're good valuations to be picking them up as bargains. And they will be in the foreseeable future as interest rates rise and those things keep getting beaten down. But eventually down the line, 5-10 years from now, they're going to rebound way faster than anything in the S&P 500. Just because those are bigger companies and they're more stable, secure, and they give you more reliable interest as the years go on. So that's just basically what I'm doing. If you guys want some financial advice or need some help, or you just want to talk through things, and maybe it's how to get a VA loan, how to get a second VA loan, how to get a third VA loan, how to come up with down payments for real estate, what cryptos, or why I think certain things about cryptos, or how to get your 401k or whatever set up, reach out to me. You can drop a comment and then I can respond. I'll respond to you guys. So I hope you guys are doing awesome. I wanted to just caveat this video right here with the fact that you can't do all these investing habits and you can't do all these things without the basic foundations, right? So there's a bunch of pillars. It's like 5 pillars that you should have in your life, right, to be healthy. And those come along with mental health, physical, physical, so nutrition, financial, social, religious, spiritual for those people. So there's these pillars out there that you could that you need to have strengthen those. So I've been working a lot lately. I've been trying to make extra money, so I've been taking these extra trips and stuff like that for work. This trip right now is actually paying an extra $3,000 for me to come out here. So these are the little things that I'm doing to have a little bit more cash in the bank. Like I said, share up my cash reserves, and then also when I get back, I'll take some time to have some social time and stuff like that. So, and I've been like I said, I put out a short this morning, basically going to the gym at 3:30, going for a run before work. Work starts at 7. So there's no excuses. You got to get up early. You got to get to bed. Drink plenty of water. Eat healthy foods. Eat small meals, and then eat them incrementally around every 2 to 3 hours. Also, if you need help with fitness, like I said, I don't mind helping with that either. You can drop a comment, and please like and subscribe if you enjoy the video or get any value out of this. There'll be more content coming in the future, so please stay tuned. All right, thanks guys.